So there is some pretty big news that you would want to be aware of if you have a limited partnership. How do you know you have a limited partnership? Well, the name of your business, comma, LP, or limited liability partnership. So with this, fellow tax pros, what we've got here is a court case just came out with a ruling that basically is holding a limited partnership responsible for self-employment earnings. Now, I should clarify that the owner, the partner that got the K1, that got the guaranteed payments, but then also got income allocated to them, they are having to now account for it as self-employed earnings. And the tax, even when we're taking into account just the 2.9 plus the 0.8, otherwise known as 3.8, on that self-employment tax, which is just the Medicare, which is unlimited, comes up to over $13 million in this specific example. There's other cases out there. Now you may be thinking, well, that sounds like that's a case for big companies. And this one specifically is about a hedge fund company. And I'll give you a link to a couple of the tax resources in the body of this video. You can read up on the details related to this. But the thing to note is that when the IRS goes to court, of course, it's typically going to be on bigger cases, bigger companies, bigger dollars. But what we need to know, and not in a way to be scared, but what we need to know is that now with a ruling like this, that we need to ensure, no matter the size of our company, that we're doing it the way that the IRS is stating, because in the event of review, well, then they're going to be able to say, well, right here in these set of circumstances, in this case, taxpayer lost, and therefore you're not going to prevail, even if you want to take it to appeal or a step further. There's nothing to be afraid of here. But what I'm talking about is just because somebody's a limited partnership no longer is enough for them to be exempt from self-employment taxes. And now we're talking about on box one of a partnership, which is page one income, ordinary business income. So there's many partnerships out there, and at the state level, they are put together as a limited partner. Many states, it might be a limited liability company, LLC. And tax advisors, no matter how good your tax advisor is, what I'm saying is there is a shift here, okay? There is a monumental case here saying that there's going to be a look at the facts and circumstances and what is the function of that partner in that partnership. And there's not a way to take one person and give them two roles. There's many court cases related to this. I'll give you a link to them where the taxpayer did not prevail, saying, well, I have this role that I pay myself guaranteed payments, and then I also have this role where I'm a limited partner. Even if they break it up into different unit structures, even if they give themselves two K1s, none of that is going to fly. You have one person. The court, as they did here, looks at the function of that one person in that partnership to then determine if it's subject to self-employment tax. What do you mean function? What's their activity? What are they doing for and with that partnership? With that, we know that the law typically, or in the past, was very clear that it said limited partnerships, the net income from is not subject to self-employment tax. But what this court case is saying is you got to look at facts and circumstances. And just because it's a limited partnership in name, maybe it's been set up that way at the state, you still got to look at what is the function of that individual to then determine, is it subject to self-employment tax? You know, I've been talking about this for a long time, many, many years, that I think an easy area for the IRS to look at is partnerships and that net income. And should it be subject to self-employment tax? See, if you have a partnership and you're treating it as non-passive, well, you've kind of already indicated that that partner is materially participating or participating to the level to be considering as non-passive. Then the IRS, especially with AI, could say, well, then if it's non-passive, then why isn't it subject to self-employment taxes? And we know that self-employment tax is that extra layer of tax on top of the income taxes. So with this little extra commentary related to this, I don't believe that the IRS picks on anybody. I think what they look at is, where is there a theme where there's either a broad misunderstanding, or where is there an area where there's broad, maybe gray area? And this was, keyword was, one of them. Meaning, is the net income subject to self-employment taxes when it comes out of a partnership? My thinking has always been, if it's non-passive, it's subject to self-employment tax. Just is. But if it's passive, well, then it's not. But if you're now relying on that it's an LLC or it's an LP, and for that alone, it's not subject to self-employment tax, you won't be able to hang your hat on that anymore from this court case. Now, when we're talking about a number of reasons that the IRS is interested in an area of the law, well, we just talked about that. But I want you to keep in mind that self-employment taxes is Social Security and Medicare taxes. So were you aware that Social Security and Medicare typically is in the headlines, especially in an election year, talking about that it's coming to an end soon, or that the money will run out, right? So it's not funded enough, number one. Number two, if we look at pandemic relief, the employee retention credit, a lot of that relief was paid from out of the Social Security funds. And that would have been for any ERC allocated to the employer portion of that was Social Security taxes on the employer side. Then that came out of Social Security. In the third and fourth quarter of 21, it came out of Medicare. And we know with ERC, the employee retention credit, unfortunately, there's been a lot of businesses, whether purposely or not, but there's been a lot of businesses that have taken ERC that probably really didn't qualify for it. By the way, I've got a seminar to check out the details related to that. So check that out in the body of this video, A to Z ERC seminar. Why am I saying this? Well, it can't be a secret that the government also has to be smart to go, well, what are also some areas that the government needs to ensure that the funds, the treasure chest of that area of the government has the proper amount in it? Well, Social Security and Medicare. So you converge these three things, right? The fact that partnerships and the self-employment tax is related to Social Security and Medicare taxes. We take the fact that Social Security and Medicare taxes are always seem to be under constant threat of not being around. And then if I had a third arm, it would go right here with this one and go, well, we know that there's been a lot of money paid out of Social Security and Medicare. So you take these three things, and where do they mix? Social Security and Medicare taxes, which would make this of further interest to the IRS. The other reason I think it would be further interest to the IRS is that it's not a very hard audit, if you think about it, meaning not very time consuming. They don't probably even have to come and meet with you. They're not looking at receipts, not saying that they wouldn't, but it's a pretty non-obtrusive audit, meaning they go, well, we see that you've got a partnership here. It's a limited partnership. We see some guaranteed payments. We see that you've treated as non-passive. We think that the net income on box 1 reported on Schedule E, page 2, we think it should be subject to self-employment tax. Could you reply to us and tell us why it's not subject to self-employment tax, and provide us a log to show us what's being done and not done by that business owner or that partner? And the audit could technically be just to that scope, just to that very subject, which is very easy to then go, well, we don't think that you've done it properly, and therefore we think it's subject to self-employment tax. And when they have this case, and they have other cases that are underway or will be underway soon that have these same factors, these same concepts, they're going to just go, well, I mean, look at these court cases. The court indicated that in these circumstances, that is subject to self-employment tax. And so what are you going to be able to do in appeal? Lose. What are you going to be able to do when you go to court? Lose. That's why I just say pretty straightforward, fairly easy audits for the IRS as it relates to this one issue that really, as I told you in the beginning of the video, picks up a lot of revenue for not a lot of effort. So if the IRS is being efficient, which is what their goal is, then this would be an area that they could be efficient. Because if they can just go click, 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 here's now all these taxpayers we see on Schedule E, page 2. This is partnership income with the code P. It's in the column that says non-passive. Let's skip over to Schedule SE on the individual return. We don't see that income there. Let's go ahead and just send a letter out. And what's the IRS? Nothing more than an umpire, nothing more than a referee. Just go, hey, we just want to make sure that because you didn't subject to self-employment tax, was that done properly? So regardless if you have limited partnerships or LLCs or anything related to this in the realm, it's just a good reminder that we do have to determine every year whether or not the partner is passive or non-passive. It's not determined one year and then it's just that forever. So each year it's determined, are they passive? Are they non-passive? And then that's a great indicator on whether or not that net income should be subject to self-employment taxes. So we know that the IRS is going to be introducing more AI. I think they already have it in play, but more AI. And I think this is just an area that AI would be able to assist with, for lack of a better word, by just doing some of these simple analytics. AI can send out the letter. AI now, with a court case like this, AI could almost resolve whether or not something is conclusive that it's subject or not subject to self-employment taxes. So none of this to scare you, more to say, hey, let's make sure we're getting it right, especially when we're doing returns. Let's make sure that you're talking with your tax advisor. Make sure you're talking with your clients. So with partnerships, I'm just going to tell you in closing that I don't really have clients that they're active in partnerships. If they're active, then they're in an S Corp. And by the way, they're paying themselves plenty of wages. They're going to max out on Social Security. But if my clients are active in the business, we're going with the S Corp. Yes, the net income is not subject to self-employment tax, but there's really no argument if that net income is subject to self-employment tax in an S Corp, whether passive or non-passive, because by statute, it's not subject to self-employment taxes. With that being said, will that someday come under fire, given that the IRS, I should say with the court, just prevailed on this because the law did say limited partnerships are exempt from self-employment taxes. And the court just said, but not in this case. I'm not saying the court's wrong, but it is in statute that S corporations are not subject to self-employment taxes. But it could be easy for the law to change to just go, we're just going to make it the same as a partnership. And they would pick up a lot of tax, self-employment tax. And we know that with S corporations, there is the struggle of reasonable compensation. And did the owner, the shareholder, did they pay themselves enough for the services they're providing? You know, an easy way for the IRS to get around it, or I should say Congress, is just to go, we're not going to say that by statute an S corporation is exempt from self-employment tax. We're going to say that it really kind of falls in the same category. We're going to remove that from the statute. And now you would have, whether it's an S corp or a partnership, where potentially they're in the same boat of, if you are non-passive, then they're subject to it. So that S corp stuff hadn't happened. No court cases that I know of where that's being challenged. I'm just saying, if we look at the current and we look at where we're going, so that's more of an encouragement to say, pay reasonable wages. Make sure your clients are paying reasonable wages for what they're doing. Don't contribute to the problem of the S corp being one that's the issue. They're not paying enough reasonable wages. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And by the way, I'm JJ, the CPA. I don't know if I told you that at the beginning. I'm assuming those that got here probably know who I am. But anyways, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.